Well, it's election day in America and stocks closed near session highs. The S&P 500 was up over 0.6%, so a pretty decent day, especially considering the run that we've already gone on since bottoming out in the stock market in late October. Of course, November, generally a pretty strong month for the market, but with tonight being a key night for elections, you never know what sort of news might trip up this market. Of course, we've still got a few stocks reporting earnings as well. So I'm going to review all of that, and then I want to take a peek at a prior trade idea that we had in this video and do some kind of maintenance to that trade idea for our trade application today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 6th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience tonight. Remember to go to YouTube, click subscribe. While you're there, go to our description area and sign up for our email distribution list as well, which will entitle you to the stocks that are giving you overbought and oversold cluster signals in the S&P 500. In addition to YouTube, we're also heavy users of Twitter. My handle is @BrandonVanZee. I would encourage you to follow me there. Also, whenever you see these Market Outlook videos tweeted, we'd appreciate a like or a retweet to give us some sort of a heads up that you appreciate the video and that you want us to continue to do them going forward. We're also on Facebook. You can see the web address of our group embedded in the logo in front of you, so go ahead and join us there. All right, let's go ahead and dive into the details of the market here today. As you can see, I've got chart 4B pulled up in front of us for those of you that are Market Scholar Premium members that want to follow along at home. And this is just our 4 grid here to look at the 4 major U.S. market indices. And as you can see, we do have bullish postures across the board. Now, they're weekly bullish postures. I know that very quickly with my eye because the light green background signifies that of the charts. Notice there's a darker green like we saw over here in the S&P 500 versus what we have right now. We have a weekly bullish posture when we have that green line that's rising but still isn't quite above 50 yet. So we're not up above that midpoint at this current juncture. So that's kind of how we stand here with all 4 of our indices right now. You can see how it looks over here on the Dow. And then we've got the NASDAQ down below and then Russell 2000 in the lower right-hand corner there. And so that's a positive sign for those of you that want to be bullish in the market right now. However, it's not quite as simple as that. As many of you can see from a price perspective, there is a bit of a dangerous juncture in front of us, and that is the downtrending 30-day moving average. In fact, with the Dow Jones, you can see we're actually touching that as of right now. The Dow Jones was up 0.68% here today. The S&P 500 was up 0.63%. So Dow Jones actually outperformed the S&P 500 to a degree here today. And you can see we're basically touching that downtrending 30-day moving average. Now remember, the thought process from a technical perspective is that that 30-day moving average can oftentimes be used as kind of a launch pad. And if we're in an uptrend like we were back here, notice how that moving average right there and then again right there was used as a launch pad higher. We were in a series of higher highs and higher lows. Well, now that we've broken down below that moving average, the thought process is that that downtrending moving average could now potentially be used as a launch pad to bounce that market back lower. We'll see if that happens or not. Again, from a seasonal perspective, we are in a bullish time of year, but I'm sure there's going to be a lot of question marks surrounding the election tonight and some of the results and things like that. So we definitely have the possibility for a short-term disturbance on the charts due to just the technical setup and some of the political news that might be out there. So just be aware of that. But it is a good sign to see kind of stabilization across the board. In fact, also interesting to note that if you look at these performance labels up at the top here, we don't refer to these all that often in the videos, but they are a nice little feature of this particular chart setup 4B. Notice that we've got kind of 4 different time periods up here at the top of these 4 grids. We've got a year-to-date performance, a 3-month performance, a 6-month performance, and a 1-year performance. So it's kind of nice to see the Dow Jones back to positive performance on all of those time periods. Remember that when the performance is positive, we'll get green background of those labels themselves. Now, obviously, the S&P 500 is still down over the last 3 months, as is the S&P 500, and the Russell 2000 is even worse. It's down over the last 3 months and the last 6 months. But again, just goes to show you that, right now the market is seeking out some of those mega cap names. I noticed Coca-Cola and McDonald's, as an example, were both hitting all-time highs here. And so those are the types of companies that are in the Dow Jones Industrial Average. And it's kind of helping it become kind of a bellwether for the market right now and withstanding some of the pressures that we've seen in the month of October. So that's where we stand. Positive day for the markets, closing near session highs, and we continue to have a weekly bullish posture from an intermediate term perspective on all 4 indices. Let's go ahead and take a peek now at our next chart setup. Let's take a peek at our chart 4C in this case. This will be our 3 green arrows chart setup. 3 green arrows is just a way to reference 3 different technical indicators: the 30-day moving average, the MACD, and the stochastics. And the thought process is, if you want to be bullish, then you're looking for 3 green arrows. If you want to be bearish, you're looking for 3 red arrows. Right now, I can't really satisfy either of those audiences because we actually have a mix of green and red arrows on all 4 of these charts. I know that very quickly because you can see the background color of the chart is white. If we had 3 red arrows like we did here previously with the S&P 500, it would be shaded pink like that. And if we ever have 3 green arrows, it would be painted light green like we saw back here. So right now you can see that our current candle on all 4 of these indices has a white background, and so we don't really have a true trend trading setup. This is more of a market that's trying to stabilize. It was once in an uptrend. Then, of course, we had the nasty month of October to destabilize things. Now we're trying to stabilize yet again, but that usually requires us going sideways for a while. It's kind of where we find ourselves right now before we decide where our next leg of directionality will be for the market itself. Let's go ahead and take a peek at another chart now. Let's go ahead and move on over here to our 12 grids now. This will be chart 4E. And remember, chart 4E and all of the 12 grids, the way that you'll read them as far as the background colors of the charts is that if it's green, it means we have a bullish posture using the intermediate term line on the market forecast indicator. If it's red or pink, it means that we have a bearish posture using the intermediate line on the market forecast. So as you can see here, we've got kind of a mixed bag, and that makes sense. This is the Intermarket Analysis 12 grid. And so remember, these types of assets that we look at here on chart 4E do not necessarily have to track the stock market itself. Many of them are not correlated to the stock market. So let's see what we can uncover here from this perspective. One of the things that's been, at the top of minds of a lot of analysts here this week has been crude oil. That's our chart in the lower right-hand corner here that I'm kind of circling with my mouse. Notice that crude oil was down yet again. This has been one of the worst months for crude oil in years. As you can see, it wasn't too long ago. We were actually in a very nice uptrend for crude oil going into October, but as soon as October hit, we basically have been going down in a straight line. So over the last 3 months, you can see that crude oil is actually down 9% in the last 3 months, and this was actually one of the better looking charts just up until the last 1 month. So it just goes to show you the first 2 months of that 3-month period were strong. It just goes to show you how violent the last 1 month has been to take away all of those gains and then go down even further. So crude oil itself is a little bit worrisome. Remember, you typically want crude oil to remain robust if you believe the markets are going to be bullish in the future, the equity markets. It's kind of viewed as a risk-on asset class. So that is a little bit of a fly in the ointment, despite having bullish postures across the board in the equity markets right now. The good news is that a lot of the energy stocks are holding up a little bit better. Some of the big stalwarts like your Exxons and your Chevrons, they haven't gone down as violently as crude oil prices themselves have gone down. Now, when we look at a couple of the other commodities out there, they're holding up better. Notice that ag commodities are right here kind of in the lower rung as well. Yeah, we were down today, but we retain our bullish posture. We're still above a rising moving average. Kind of the same story here with gold right next door to it, where gold is still up over the last 3 months, but only 1%. But the good news is it is stabilizing a lot more. Gold has kind of been in the house of pain for much of the last few years. So it is good to see kind of this stabilization. You even see an upward trending moving average here that is kind of respecting at this point. So maybe that could bode well for those of you that might be gold bugs going forward. We did see the dollar pull back a little bit today, but the dollar continues to be fairly resilient and continues to be relatively strong compared to many other currencies around the globe. And so keep that in the back of your mind as well, because that can have an impact on things like commodities and other foreign stock markets, et cetera, et cetera. So that's kind of where we stand with some of those key asset classes in chart 4E. Let's take a peek at another 12 grid. This time, let's go ahead and look at chart 4F. And this will be our foreign stock markets. And this is a much rosier picture. Remember, it wasn't too long ago where we had kind of a clean sweep here, with the exception of Brazil, to the downside, meaning that we had bearish postures on many of these equity indices. Brazil has been kind of the exception to the rule, as it's continued to be very strong in the upper left-hand corner here. But otherwise, a lot of these charts had been really struggling for months. And so kind of like we've seen here in the United States, we've also seen stabilization in many of those key foreign stock markets around the world. And as you can see, we have all 12 of these charts in front of us with a green background. So they all have at least a weekly bullish posture. So that's a good sign for risk appetite at this current juncture. Obviously, there's a lot of work to do before the charts themselves look a little bit better, because many of them, you know, yes, it's true, the posture might be bullish and we've seen a nice bounce, but many of the charts still have a lot of work before you would consider them uptrending charts. You know, one example might be like down here, Israel has made a really nice move off of its bottom, but notice that we're kind of right up at that resistance area right now where we topped out back here in the middle of October. So this will be a key area. The good news is it is now above the moving average, which is more than we can say for, let's say, the United Kingdom right next door, which is a little bit more worrisome, where we've bounced off those lows. We've gone up to that downtrending moving average and we're still below it, opening up the possibility of a bounce back down. At least with Israel, we can see that we're above that downtrending moving average. So that's our first hurdle to overcome. And if we can get up and over where we were trading right here on October 16th, that'll be another nice little feather in the cap for those of you that want to be bullish on Israel stocks. So that's kind of where we stand. Again, the best looking chart remains Brazil, and that's been the case for much of the last month or two. But the good news is we do have stabilization across many of the other markets. Russia also deserves maybe a little bit of a look here. You know, Russia is sometimes forgotten about, particularly in light of the fact that the crude oil markets have kind of spiraled downward. You would expect Russia, which does, of course, a lot of work in the commodities, especially energy-related commodities, to struggle as a result. But the Russian equity index actually is holding up much better. So perhaps that's a little bit of a poker tell there. Keep your eye on Russia. It's not all that far away from a 3-month high at this point as well. Let's now take a little jaunt over here to the U.S. sectors 12 grid, which would be chart 4G. And as we're looking at chart 4G here, first thing that catches my eye is, first of all, that we only have one pink chart, and that's the utilities. And I was actually looking at this just before the stock market closed on the day, and for a brief moment in time, the utilities were actually bullish as well. It had that green background, but just at the end of the day, it must have sold off a couple of pennies and kind of reverted back to that bearish posture. But I wouldn't necessarily throw that idea out the window quite yet. I actually don't mind how utilities have popped higher for the last couple of days off of that moving average right there. So, you know, we'll have to keep our eye on that. Of course, utilities are very interest rate sensitive, so to a degree, you're kind of at the whims of the macro there. But right now, that's actually not that bad of a bounce candidate. And you kind of have the makings right there of almost an inverted head and shoulders type of a pattern when you're looking at utilities. So keep your eye on the possibility of utilities breaking out to the upside. Speaking of breaking out to the upside, a real pleasant surprise of the last couple of months has been the strength in the consumer staples. I mentioned Coca-Cola earlier hitting an all-time high, but they're not alone. You know, stocks like McCormick and Hormel, so all three of those I just mentioned are dividend aristocrat companies that have raised their dividends for 25 years in a row or more. And the consumer staples are the sector that concentrates the most on those dividend aristocrats. And so it's good to see that when investors got a little bit worried about the markets in October, they sought safety in some of those higher quality names that can be relied upon a little bit more. So we are seeing really strong price action on the consumer staples. We're actually hitting multi-month highs in the staples right now. And so that's kind of been one of the stalwarts there. In fact, as we look at all of the charts from a 3-month perspective, notice that the consumer staples are up 3.31% over the last 3 months. That is leading the way across the board. In second place, the utilities are up 1.7%, and then just barely eking out positive performance over the last 3 months is healthcare, up 0.6%. And of course, all three of those sectors are kind of viewed as more defensive areas of the market. Much of the cyclical areas of the market continue to struggle despite the rebound in the last couple of weeks. You got your industrials here that are down 5% in the last 3 months. For those of you that are Premium Market Scholar subscribers, you'll know that I teach a dividend growth investing trading room every Tuesday morning. And so today we actually focused on two industrials companies, two dividend growth stocks that have raised their dividends for a number of years that look attractive at current yield. So feel free to go back and check out that recording if you so desire. So the industrials, perhaps there's some opportunities from a value perspective there. They're still down 5% over the last 3 months. Of course, we got materials down 7% over that time period, and energy down 8% over that time period. Communications down 7%, technology down 5%, financials down 4%. And discretionary down about 3.5% there. So the story kind of remains here that this is a defensive-oriented market in terms of the intermediate term time period. Let's take a look at what these different sectors did on a daily basis rather than a 3-month basis. For that, I'm going to come on over here to the Market Watch tab. And you'll see here that it was actually some of the more cyclical areas that led the way today. We had the materials up 1.6% today, and then we had the industrials up 1.1% today. The laggard today was actually the financials. They were up 0.44% today. So the good news is we had a clean sweep. All of our sectors finished in the green fairly robustly. It wasn't as though actually it was, I might have said the financials, my apologies. That was actually the discretionary stocks. XLY is discretionary. But anyway, discretionary was the laggard today at 0.44%, but that wasn't like it just, dipped its toe in the water of positive territory. That is clearly beyond the finish line there. So all sectors actually had a very promising day here going into election night. So that's good to see. Let's take a peek within the materials space to see who was leading the way higher within the S&P 500. Let's take a look here at XLB components. And as you can see, we had Mosaic do very well here today. It was up 10%. Martin Marietta had 8.4% move today. And then CF Industries was up 4%. So, some of those chemicals names, including FMC, the fourth place one, was up about 4%. So you got FMC, CF Industries, and Mosaic. Those are kind of your agricultural commodities. Think of, the crop sprays and fertilizers and different things like that seem to be a little bit in vogue here today. All right, let's now take a quick little peek at what's been going on after hours tonight. Pizza, ticker symbol PZZA, which is Papa John's, is supposed to report earnings. Let's see if they've done so yet. You know what? It shows that they have reported their earnings, at least if I'm reading these headlines correctly, but I'm not seeing any movements yet. I'm only 20 minutes after the bell, so perhaps there's not a whole lot of movement there. Actually, there was just one tick right there down to $53 even, so not a big movement. This one closed at $53.47 to end the normal session, so the first tick lower in after hours after that earnings announcement was down to $53 even, so maybe down about 45 or 47 cents or so. Let's take a peek at Match Group. That was another one that was reporting earnings after the bell tonight. As you can see, we have had a little bit more movement after hours there with Match. The initial thrust was a thrust higher here. And so as you can see, this was a stock that closed at $51.47 in the normal session. It traded all the way up to $53.40 at one point before kind of settling back in where we stand right now. Last traded price was $51.69. So a little bit of a head fake there, perhaps, as investors parse through the numbers of that online dating site. Match group right there. And then one other one that was due to report some earnings tonight was Zillow Group. Remember the big online real estate company. So that's just ticker symbol Z. And this one, I do see some reports after hours here, but it doesn't look like it's been trading after hours. So again, it is pretty early right now when I'm recording this, so maybe just needs a little bit of time to air out. But keep your eyes on those names, because remember, it's the earnings names that oftentimes have the possibility of impacting the market the next day. In fact, remember that one of the things that I do is I put together the 9 at 9 every morning. I post that on our website at marketscholars.com. I also post it to Twitter and Facebook and other things like that. But anyway, you can kind of get a sense of what stocks are going to be up and down pre-market that might move the markets later. And of course, a lot of those are earnings related this time of the cycle. And so, even today, Mylan and Booking were a couple of the big ones that were up today. I also noticed CVS was up. And so these were the pre-market movements. So Mylan was up 8% pre-market. Booking was up 6% pre-market, and CVS Health was up 2% pre-market. So if we kind of look at where they ended up on the day, Mylan continued to go up further. So notice that Mylan was up 16% at the end of the session today. So they were up 8% pre-market. But even if you would have bought it at that point, it would have probably been a tough thing for some people to swallow, buying a stock that's already up 8%, but you would have made another 8% beyond that by the time the session ended here today. Let's see how Booking fared in that regard. And you can see that Booking actually dropped a little bit. So Booking was up 6% pre-market. By the end of the normal session today, it was only up 4%. So they actually gave back some of their gains in the pre-market in that case. And then the other one that we looked at there was CVS, and that's CVS Health. Of course, they got the big Aetna merger that they can look forward to here coming very soon. But anyway, CVS was only up 2% pre-market, as you can see here from the graphic, kind of to the right of where I'm circling right there. And they ended up being up about 5.7% by the end of the day. So again, would have been another one where you could have bought it in the pre-market even after it had reported positive numbers and still had a pretty promising day there. So make sure you're taking advantage of those 9 at 9s that I post for you every morning, every trading morning at 9 a.m. Eastern time if you want a heads up on which stocks are likely to be moving in the stock market that particular day. Also, while I'm over here on the internet, reminder that you guys can watch these market outlook videos on our website as well, up here in the blog area, the same place where you can find my 9 at 9, all the stocks that are growing their dividends every day, and my sector selector and different things like that. So just come over to our website, click on blog. But we try to make this nice and easy for you in terms of giving us feedback on these videos. Here on our website, you can click like on Twitter right here. You can click a thumbs up on Facebook right here. And you can even leave a like for us on our website right here. So you can do all three of those clicks in one convenient location. Generally speaking, as long as we're getting about 100 likes on Twitter, we generally view this as a positive way to spend our time on a daily basis. Remember, we don't get paid from these videos. We don't make any advertising money, so we have to make sure that these videos are worthwhile to you guys, our audience, and I can say thank you to you 94 that clicked like on Twitter for me last time around when I did this video. So keep up your end of the bargain on that, and that'll give us a heads up that we should keep on making these videos for you guys. In addition to that, we're over here on the internet, so let's take a quick gander at our sector selector. Remember, I produce this sector selector on Friday evenings typically. It's two-part graphic. The first one will give us a heads up on the sector rotation that's taking place, and then the bottom part of the graphic will show you some of the stocks that are hitting new highs and new lows, etc. Generally only make that available for our premium members, but everybody is entitled to take a peek at the top part here. So let's see what sort of movements we saw this week. Communications remains resilient up there at the top. Remember, the way that I'm ranking this, I'm using 10 different technical indicators to make these rankings on an equal weighted basis. And so if you're only looking at communications through a market cap weighted thought process, like XLC as an example, you're basically only looking at Facebook and Google because they are such massive portions of the communications group. But if you dig a little bit deeper, you'll actually find out that there are a number of communication stocks that have held up very well in the last month or two when the rest of the stock market was really tumbling. A lot of the media stocks that are out there have held up, like a Disney. A lot of the telecom stocks, like a Verizon, have held up reasonably well as well. So, make sure you're taking a peek at some of those smaller, lesser known players beyond just Facebook and Google. But otherwise, it's much the same story as what I presented last week, which is this is still a market that is kind of being led on a relative basis by the defensive areas. Utilities, staples, and healthcare kind of round out that top four right there. And that's kind of what we would have assumed. Again, noticing what's been happening within the market, where the market's trying to drift towards some of those higher quality names that are out there. So anyway, that's our sector selector wrap up here for the day. Now, let's take a peek back over on the paper money account. And I wanted to bring up a trade that we did right here in this video back on June 28th. For those of you that were lucky enough to be watching that day, we stumbled into SBUX. SBUX was a stock that we'd actually bought in my dividend growth investing class earlier that week as well, when it touched a 3% yield for its first time in history. Now, again, that was in the last week of June when that occurred. So we were fortunate enough here in this particular video to buy a call option on it as well, which is fairly rare. We hardly ever buy call options in this video, not because they don't have their time or their place, but just generally because they are low probability trades. So you want to use them sparingly. I am very glad that we used it sparingly on SBUX because it's worked out tremendously. In fact, if you go back and listen to that video on June 28th, you would have heard me say, you would want to buy this call option if you thought SBUX had a chance to get up and above 52.50 in the next couple of years. Well, even myself, I was very surprised to see how quickly this stock has moved up, particularly last week after earnings. So we didn't have to wait a couple years for it to get above 52.50. We're already at $66 per share today, just 4 or 5 months after placing that trade. Remember, what we did is we bought the leaps, meaning that we bought a long-term call option, a call option that doesn't expire until 2020. So it was kind of a long-term call when we bought that, or a long-term thought process, or however you want to phrase that. And so you can see we still actually have 437 days left until expiration on this. If we click on the amount right here, the quantity, you can see that we placed the trade the following morning. Remember, we do these videos at night, so the trade doesn't get placed till the following morning. So we got filled at this on June 29th at $7.50. Now, we were buying the $45 call on SBUX for $7.50. So in other words, our break-even price on that would have been that $52.50 that I quoted a moment ago. We add the $7.50 plus the strike price. And if you thought that SBUX would be trading above $52.50 in January of 2020 and over 400 days from right now, then that might have been a positive trade for you to conduct. Well, as you can see here, we spent $750 buying that call option, and we've already profited over $1,400. So we've almost tripled our money. Remember, we double our money when we've profited $750. Well, we've almost done that one more time over. So we're very close to tripling our money on that very rare call buy that we talked about in that video that day. So what I thought we would do today is manage that trade to a degree. And these are the fun types of management where we have the opportunity to take advantage of the gains that we've received in order to kind of collect our thoughts and decide what we want to do going forward beyond that. So as I come over here to the charts, let me show you something that did catch my eye. So let's just pull up chart 1A for the time being. And I'm going to pull up ticker symbol SBUX here, SBUX. Notice that we've got this red dot above the weekly candle chart. So this is a weekly candle chart that we're looking at right here. That red dot occurs when we get an overbought cluster signal, which are somewhat rare, particularly right now when most stocks have been getting bludgeoned for the last month and a half. So not a whole lot of stocks out there are giving you an overbought signal on a weekly candle chart. Remember, these clusters are more rare on weekly candle charts than they are on daily candle charts. So we might be kind of nearing a point where SBUX might start taking a little bit of a breath. After all, this thing has basically gone up in a straight line since we got in. Again, we got in right back here on the final week of June, and this stock has just gone basically up for the most part, like clockwork. And so we've been very happy with that. Well, one of the things that you can do is you can roll your contract. Now, let me come over here to the trade tab, and I'll show you kind of some interesting thoughts here. Our delta is now 0.88 on this. A lot of times that we've taught in the past, you buy a 70 delta on a long-term call option that you're buying, and then you roll it when it gets to an 86 delta. So we're now past an 86 delta. We're at 0.88 with today's big move higher. Remember, the stock was up another 2.37% here today. So that gives us an opportunity to roll our contract. And just the way that the math works out, it actually opens up a situation where we get a risk-free trade out of it. So what we're going to do is we're going to we're going to sell our contract that we currently own, which is the 45 call, and we're going to then buy another call around the 70 delta in the same month. Again, we're still focusing on those leaps contracts there, so we're going to want to use limit orders here because, yes, that's true that we do have a lot of open interest here, but you just can't be too careful when you have 400 plus days until expiration. So do not use market orders on this type of a trade, or at least I don't think that would be a wise decision. Limit orders only. But, the nice thing about the way that the math works out here, notice that if we go over to the 70 delta, we would only have to pay $12 to buy this 57.50 call option. Notice how much we've already made on our call option that we currently own, $1,400. So in other words, when we make this transaction, we have a risk-free trade. We're locking in the $1,400 worth of gains that we have right now, and then we're funneling 1,200 of those gains into keeping this idea alive in case SBUX continues to go up. So we're going to buy this other call option at $57.50 for $1,200. And if SBUX continues to go up in the years to come, we'll continue to benefit. On the other hand, if SBUX falls completely on its face, and let's say the stock market itself goes into a bear market and this stock, plunges lower by 30 or 40%, well, we've already taken our gains out of the trade. So it's literally a risk-free trade. So with that, let's go ahead and place that trade. I think I can just right click here on our call option and then go to create rolling order. And I'm going to just choose this option that the Thinkorswim platform gives us right here. And in this particular case, it loads up a calendar for us, but we do need to make some adjustments right here. So first of all, we're going to sell the January 2045 call. So on the top one that we're going to buy, we want to make it match that same time period. So it was going out to January 2021. In this case, we want to go back to 2020 here. Now we also want to adjust the call option. And so the one that we picked out was the 70 delta, and that's our 57.50 strike. And so I'm going to go ahead and click this drop down here and go to 57.50 right there. So again, notice what's happening. We're going to collect a credit of $9.89 by transacting this trade, effectively eliminating and removing all of our current risk out of this trade idea. Now again, I want to use a limit order here because I just don't trust market orders when we have these long-term options like this, but I will go ahead and change this to a good till cancel as well, just in case we don't get filled first thing tomorrow morning. So again, confirm and send. Everything looks great there, and we'll see if that trade can continue to benefit us going forward. All right, well, I want to thank you for joining me here tonight. Again, it's a big night, election night. Remember that at least at TD Ameritrade, they allow you to look at SPY throughout the night now. That is a 24-hour traded vehicle. So if you're kind of curious how the stock market is reacting to some of the election results tonight, you should be able to pop in SPY on your platform to kind of get a sense of that. You can also type in /ES for the S&P futures contracts, but we'll see what the results bring our way. Where we stand right now with the markets is we have a weekly bullish posture, kind of pulling out of some of those oversold territory a couple of weeks ago. So I'll wish you all the best with your trades and your investments. David will be back with you tomorrow, and then I'll be back on Thursday. Have a great night, everybody. Bye-bye.